this is where you start to see clients like, all right, they really start to freak out. And so,
yeah, it's true. Cause it's like, oh man, I'm really spending this money and I'm under contract to spend this money.
Yeah, I'm under contract to spend this money. Yeah. So now we're like what we call building the credit package, right? So we're getting like all the documents together. We're making sure the loan application, every box is ticked, everything's done appropriately. I'm shopping with all my lenders for the best rates.
Mm-hmm.
I'm starting to see, all right, where am I going to place this thing? Because once you're under contract, you're not waiting any longer. You're not just going to wait for rates to do this or do that. I'm starting to say, all right, what's the best deal I can get today? And so like I'm looking, and I've got 120 lenders, so sometimes that's not like super quick. Mm-hmm. I usually know probably one of maybe 5 banks I'm going to send this to, but until the day comes, I don't know. So
the lock is something that confuses a lot of people in terms of like what locking a rate and when to wait and when to take a move on it. So like shed some light on that.
Yeah. So a lot of agents believe that the day you go under contract is the day you lock, and that's not necessarily true. There are a lot of now. The other thing I'll say is that it looks like
what I was going to say, just in terms of like locking in interest rates. So interest rates are fluctuating all the time. So I just wanted to kind of clarify.
Yeah, you're right.
Interest rates are fluctuating all the time. So you might like 6.25, 6.27, 7.1 or whatever. And so all of that's fluctuating. And so at some point you've got to make the decision and lock a rate, right?
So yes. So they always are fluctuating, and you basically take what you get if it's moving up and down. But if you lock it, that entire table from the one with all the points buy down to the one with all the credits is locked in. So you can move, once you've locked it in, you can move anywhere in that table at that given snapshot. Mm-hmm. So you could, that whole thing's locked in. So the pro is that if the rates go up, you're protected. The con is if the rates go down, you're really not. Yeah. Like that's what you're locked in at. Now, there are lenders that allow what they call like a float down. Mm-hmm. Usually it's a small fee, and you can kind of take an updated table if it went down the day after. Some lenders might say, hey, if it goes down this amount within 48 hours, we'll just let you have it. There's a lot of different policies here, but in general, once you lock it in, it's either that, and it is that, and then if they go up, you're protected.
Right. I mean, there have been people, it's like, I don't know, it's just been my experience that with lenders, they typically know it's like, hey, just go ahead and lock this one, right? And you're not going to see a ton of fluctuation, but there have been scenarios where we've seen big swings like post-COVID. And I remember you were like telling people like, if you don't lock this today, this is like, this bad thing is going to happen. So once you get in kind of volatile markets in terms of interest rates, it's like, listen to your lender.
Yeah. I have a crazy story about that one. So I was in Costa Rica, and I was working with a client. This thing never even closed, and I was so mad. So I'm in Costa Rica, and they have what's called jungle internet, meaning crap doesn't work is what it really means. And so I'm checking rates because he's super rate sensitive, and rightfully so. He's buying a house, and I see a rate that I haven't seen in months and will never see again, and I know it.
Yeah.
And like you said, so we watch rates all the time, so we kind of know when these things happen. And so I'm calling him. I'm like, we need to lock now. Mm-hmm. And he's like, I got to talk to my wife. I'm like, no, to talk to her, but we need to lock now. And I drive. I'm on the west coast of Costa Rica, and internet's crap, and they just had a big storm. So I'm like driving into town, trying to find this like cafe that has internet. Find one.
An internet cafe.
He calls me back, and he's like, yeah, we're not going to lock. I'm like, and so, all right, I'm packing up. I'm going back to my place on the west coast of Costa Rica. I get there, and he calls me back. Yeah, we want to lock. So I drive back to the cafe. I lock it, and then the thing never even closed. But yeah, so sometimes there are just those, you need to lock right now.
Yeah.
But anyway, in general, they do fluctuate. Some people think you need to lock it the very first day. That's not exactly true. If you happen to know things that are going on in the marketplace, you might want to wait. You might not. So. It's all work with the lender when you get to that realm. Like, don't just make any assumptions about rate locks.
Yep, totally.
So we build the package. We've got all the docs put together. I've shopped for the rate. We've had the lock discussion. I'm starting to get like taxes and insurance now that are a little bit more accurate. So like if they have an insurance carrier, if I've got one that I'm going to refer them out to, I can get a quote. an actual quote based on the address. I can get the property taxes based on the address. So we're starting to get a real clear picture of what monthly payment looks like. It could still fluctuate a little based on, finalizing those things, but we're getting within dollars now. And that's honestly where it starts to make people a little nervous.
Yeah, absolutely.
Is they're like, before this was all like ranges, but now we're like,
now we're dialed
this
in.
is my payment.
Yeah. Yeah, that can freak people out because where they start typically in their expectation for payment, just at the beginning of the buying process, and where they end up, it's going to make them squirm a little bit. And they're like, oh, that's a little more than I wanted, or it's a little more than they're paying now, but they'll be fine.